Well, Nigeria's economy has long been driven by foreign investments, but with capital inflows soaring to $2.06 billion in January 2025, it's clear that the country's appeal to international investors is stronger than ever. What's behind this surge, and what does it mean for Nigeria's economic future? Our guest, Mr. Ogbonna Ukuku, an investment economist, will help us break it down. You're welcome to Business Express.
All right, thank you so much.
Well, I don't know whether you agree with that, the reforms we have on ground, whether it's actually attracting the needed investment we need at this point. But the readings there show that foreign direct investment is somehow declining. I don't know how we could possibly do that mathematics. Do we actually, should we expect more from, foreign direct investment, or should we rather look at the portfolio investment side?
Okay, so we'll look at it from two sides. Okay, I mean, like you said, let's see how we can work around the mathematics. The capital inflow is increasing when it comes to foreign direct investment. I mean, portfolio investment. But when it on the other hand, when it's greenfield investment, is declining. So this goes to show that there's something happening that we need to take advantage of as a country. So what is that? There's this appetite to come do business in your environment. So like I always say, investors are resource seeking, and they are market seeking, and they are strategic asset seeking, and the most important thing, which is always the denominator, is the efficiency in your system. So the decline you see that is happening when it comes to greenfield investment is occurring because the efficiency in the system can erode all the other three factors that woo an investor. So what do I mean by that? So if you look at the deficit we have in infrastructure, those are the things that will support investment so that your cost of production will not be as high, so that it can also be competitive. Now you look at business environment generally, licensing, the tariffs when it comes to importation of raw materials, or you want to even acquire your raw material supply strategy if it's going to be efficient. So these are the things, because I mean, when it comes to production, there has to be an aggregation of I call it an aggregation of a sequence of things that are known and things that are not in the dark. So if, for example, you need some supply for raw material, and then something happens, and then there's maybe like there's a hit in a farm by headsmen or something like that happens, so that will cut your supply, and then the equipment that you're using, which is supposed to be running 24 hours, so that snag will cause that inefficiency. So investors are like water, like I always say. They flow to areas of least resistance, and when it's a dark hole, it makes it difficult. So that's why you see in portfolio investment, you see these are already existing structures, businesses that are already flowing, and you see them, they just want to come, play in the market, take their returns, and then fall back. So, but when it comes to real greenfield investment, which means they are going to sit to it, they are going to move from one client to another to come and sit here. So a few things needs to be done, and those things are things that will make them comfortable to want to function in your environment.
Okay, let me pick your thought on this. We've seen the latest economic growth, and projections by them, and we've also seen this ranking according to the size of the economy. We've seen Nigeria has fallen off, I think, from third to fourth now. And those are, does it mean that those other places have better investment destination than Nigeria?
Now, what it means is that, like I talked about earlier, I said something, when it comes to energy sufficiency, for example, South Africa has been sufficient in energy. So those are things that support industrialization. Morocco, you look at Egypt, the northern part of Africa, you see they have been very sufficient when it comes to infrastructure. So those things, and they have been self-reliant when it comes to agriculture, because when you're talking about raw materials, you're also looking at things that come from produce, that come from agriculture. And yes, they also have natural resources. So it becomes a case of people doing the X-ray. There has to be an helicopter view of different locations to say, okay, this is where I'm going to put my money in, because the structure in that place will accommodate me. Okay, is more favorable for my investment. Because, I mean, investors, they have a mindset, they have a way they reason. So we need to understand that a man with money has a way that he thinks, and he doesn't have time to come and start wasting on one table to the other for a file to push, to be pushed or not to be pushed. So by the time you automate issues, or by the time you make things a bit more efficient, it makes it a better environment for anybody to want to come and do business.
Now according to this central bank's monthly economic report for January, Nigeria's high yields have been a major draw for foreign investors, with capital inflow soaring to 2.06 billion in 2025. How sustainable is this strategy, and what are the factors that that Nigeria can leverage to actually attract more foreign investments?
So one thing is key. You see, the leadership, the central bank, the leadership at the central bank, they've been consistent. You can see that their regulations, their job, they're doing it with consistency. So now predictions, market watchers can predict, because they know what Cardozo and Co will do in the next 2-3 months. They know exactly what the interventions are, and they've been consistent. That's what we've been talking about since. It's not, you don't bring in disruptions along the way. So you can see there are no interferences from the executive. You know, you could see them. They've been given an opportunity to run an efficient central bank. So that is actually one of the things that have been whetting the appetite of portfolio investors. So that's why you see the capital inflow. It will continue to flow that way, because as far as the central bank remains as consistent as they are, you will see the capital, the flow will continue.
We're actually seeing an increase in interest rate. What happens if today price fall and the what monetary policy committee decided to lower interest rate?
Okay,
so
now
what happens now?
Okay, now this is how I always say it this way. I use a very good illustration when I'm describing monetary policy and fiscal policy. Those who manage them. So they are like, we like football in Nigeria. So I use football as to do that illustration. So the fiscal policy managers are like the strikers, while the monetary policy managers are the defenders. So the success of every team, the victory of every team, yes, is dependent on both strikers and the defenders, but it's more dependent on what the strikers do. That's what gives us the victory. So when it comes to stability, in the financial market, trying to sustain the economy based on, because it's a reaction that comes from the environment that is what informs what the central bank would do. So basically, they've done well and they've sustained well this thus far. So if there is a reaction, there's going to be an equal reaction from the monetary policy to either lower rates. When inflation starts to drop, of course they will definitely lower the rates, and then that will make lending a lot more easier, and access to capital for industries would increase.
Okay, just a quick one. What do you make of Trump tariff? How is it impacting on investor confidence, even in Nigeria, at this point?
I think it's just a general thing right now. So a lot of supply chain. There's been a lot of disruption when it comes to supply chain, because everybody's trying to see what next, what is he going to say next. So that's what I was talking about, being consistent. Our central bank has been consistent. That's why you see everybody knows, market watchers know exactly, investors know what to get out of Nigeria. But as it is now, everybody's just aloof, watching what's the next thing that Trump is going to say, and what is he going to do when it comes to tariffs. Where will this war go to? So it's just going to make a lot of people just sit on the fence and then watch. So invest little, and then sometimes most of these funds, fund managers, hold on to funds that belong to other people. So when it comes to OPP, you really need to be very careful, because you don't want to throw in monies and then you begin to cry, after a while.
Well, Mr. Ogbonna, Ukuku, it's been a pleasure having you on the program.
All right, thanks for having me.